Welcome, everybody, and thank you for joining us. I am here with the wonderful Bob Anderson, and we are going to be talking developments. Hey, Bob, how you going?
I'm great up here in sunny Queensland.
Well, you're not allowed to say that, remember?
Moon Queensland. Yeah. Nearly full moon.
And I'm here in Sydney in my, I don't know if it's 7th or 8th week of captivity, and running out of the internet and TV shows to watch. But hey, look, I'm always about reading and educating myself. And obviously you are a like-minded spirit because you've chosen to join us tonight as well. As I said, we're talking developments. Always love talking property. But just remember, before you undertake anything to do with property investment or any financial commitments, always conduct your own due diligence. Be sure to get independent advice, legal advice, and finance advice. So what we're going to be chatting about tonight is personal in nature. It's based on experience, and sometimes, well, you absolutely all the time, past performance is not an indication of what the future performances will be. So please be mindful of that. We've also got Hilary Saxton. Bob Anderson and Hilary Saxton run the Property Mastermind mentor and coaching group as well, and she's in the background there. So if I'm unable to read whatever the questions are along the way, Hilary may jump in, or we'll just save it towards the end of the session as well. And tonight we are just going to be doing a bit of an organic chat about developments, and I think that's something that'd be quite fair to say you and I could talk about under wet cement, Bob.
Well, we have. Virtually, or talked about wet cement probably. Yeah, no, it's been my life. You know, I'm still passionately in love with it.
Oh, good stuff. When was your first foray into the development?
Dare I admit, probably half your listeners tonight probably weren't even born. 1982.
Yeah.
My first foray was in a little subdivision actually. And that's all I did for the first 4 years is little subdivisions. And it was a 4-lot subdivision. I remember it well.
Yeah.
And that's what started it off for me. So it went from there.
Yeah.
And went and still going.
And still going, yeah. And so you said 4-lot subdivision. What has been the bigger, you know, what's the biggest? I'm not thinking sky rise, but in terms of just volume of complexity of what you've been doing in developments.
Well, I've had 2 lives. One is I have worked for well, I'm not sure about it. One is that I worked for a couple of really large development companies back in the I'm going to say the 1800s. Some people might believe me. In the from about the late 80s to probably 2001. So I worked for big companies. So we did big projects. Some of them quite tall commercial projects in the city, but large subdivisions, 400-lot, 800-lot subdivisions. When I was working for those big companies, a 67-story commercial building. But that's big stuff, of course, with big companies. It's all relative.
Yeah.
That's the beauty. That's the beauty about property development, though, Joe, is you can be a Mirvac or a Meriton and do massive projects, or you can be just Joe and Jane average, but still do property developments, albeit a lot smaller, but still profitable, and relatively profitable. In terms of our own wealth, we'd love to make the profits that Meriton make every year, but that's not going to happen. Just a 2-lot subdivision is sort of where it starts, and we can do those. We can be property developers, just like Harry Treeboff, on a small scale.
On a small scale. So micro developments, is that the terminology that you would use for something like that?
Yeah, I guess. For me, property development starts when you create, let's say, more titles. Like, for instance, a renovation is a renovation to me. I mean, I suppose if you did a big structural renovation, you'd be bordering on a property development. But buying a block of land, building a house, I just call that a spec house.
Yeah.
For me, property development starts at a 2-lot subdivision because you're starting off with one thing, namely one lot, and then you're creating 2 lots. And so you're sort of making more out of less in a funny way. I used to refer to that as multiplication by division, and which sounds a bit weird, particularly if you're a maths teacher. But what I mean is if you multiply your profit by dividing it into small pieces. And we see that principle everywhere. Like a cheesecake I often use as an example. You go to your favourite coffee shop And I know you were there this morning because I phoned you and you're getting a coffee.
I was, yes.
I don't know if you got a piece of cheesecake though. But if you think about it, you know, we're quite happy to pay $6 or so for a slice of cheesecake. And there's 16 slices in a cake. So it's a $96 cake. But they probably buy them wholesale for $20, you know. So what they're doing is they're subdividing a cheesecake. And so they're subdividing one cheesecake into 16 lots of cheesecake and selling them out at retail price for $6. And everyone's happy to pay $6 because that's the market value of the slice of cheesecake. And so the coffee shop owner is a developer and a subdivider of cheesecakes, among other carrot cakes and every other cake.
Yeah.
And the same principle of subdivision. When you parcel of land cut into two, the two are worth more than the one.
Yeah.
You know, and we may add a building to it. We might do 3 townhouses, but, you know, at the end of it, we chop it into 3 townhouses. We chop the land and the building that's on top of it.
Yeah.
And so, yeah, that's property development. It's, you know, creating more out of less and profiting from it.
Absolutely. And what I'm seeing at the moment in the marketplace is there's a scarcity on land availability. So very much so, like, you know, the regions of you know, just flourishing at the moment with people going, I'm out of here, in terms of city dwelling, affordability, and, you know, just a right, you know, increase in the population as well. So, you know, I'm seeing that sort of that micro development formula more and more, and I've been assisting clients with it for some years. And as you know, I'm now undertaking my own as well. So it's exciting to finally get my own cheesecake and cut it up.
Yeah, it is. It's great. I must send you a hard hat. Normally, I congratulate people when they get into property development. I often give them a hard hat. I'll have to send you a hard hat that you can wear on site. But yeah, I mean, you're into it too. I mean, you came to the realization that it is a doable thing.
Yeah.
You know, you don't have to go to university for 4 years and get a degree and then go and work for a big development company for 5 years before you can go and get involved in property development. That'd be a very slow way of doing it.
Yeah.
You know, you can do it.
Yeah. When you started out, what was the landscape like? Was it for professionals only? Were mums and dads doing developments? What was in terms of 1982? Very, very different lifestyle. You know, were female investors active at all?
Well, not so much. Obviously, things changed a lot, particularly in the 2000s. When I started off on the Gold Coast.
Okay.
You know, it's a long story, but I won't go into it. But I had a bad car accident. I lived in Brisbane, and then when I recuperated, it took me 2 years. I moved to the Gold Coast, and I purposely wanted to become a property developer. So, but you couldn't just walk into property development. So I worked with a real estate agency that sold land subdivisions for about 4 different developers, and that's where I sort of picked up what to do. But back in those days, you know, there's no education. The only formal property education you could do is to become a valuer. There's no courses at university or anywhere about property development, and you had to it was a trial and error thing, really. And look, it was a male bastion, I guess. I didn't even fit the mould. I think back in 1982 on the Gold Coast, you had to be a big overweight male with a hairy chest and your shirt open down your belly button with a big gold pendant and white shoes and big rings and a big chunky bracelet on your arm. So that was what you had to do to be a developer.
Yeah.
So I probably broke the mold there a bit. But you know, I started off small. I made my fair share of mistakes and learned by trial and error.
Yeah.
But of course, what's happened over the years is, particularly with the internet, I mean, that's been massive. But you know, it's an information revolution, I guess, from the 90s and 2000s, and then with the internet coming on in sort of mid 90s, it all changed. And then, you know, the knowledge was, you know, more accessible. And I got into the whole property education thing, property development education very early compared to, you know, there's a number of people out there now, most of them ex-students of mine, but that are, but back in those days, you know, it was all new. But when I got involved in property development, education side of it, I actually went out of my way a bit to encourage ladies to get involved in it, because I knew they could. I knew you didn't have to be that big hairy man with, you know, the old stereotype I knew the sort of things you needed to do to be successful in property development, and and women are very strong in those areas. They multitasking, communication, or lots of things, and I've been proved right many times. Had a lot of great developers come through our education system, and a lot of ladies as well. And I'm
awesome.
I'm pretty proud that I helped foster that.
Yeah.
It's still the case in our mentoring program. 50% ladies.
Yeah.
It's great having Hillary on board because she adds so much.
Oh, absolutely. Yeah. And one of your students I interviewed 2-3 years ago, Sonia Sheehan. And
Sonia.
yeah, and there's a recording of that webinar on the Property Women website, and she did a $600,000 profit on her first ever development, and it was a 4-lot townhouse. And this is around the time I was sort of like flirting with the idea, and kind of I think I was just keeping myself busy to avoid it. It's like I want to do it, but not this year or not this month or whatever. And she literally sat there and said, Bob was my mentor. I did what he told me to do. And this is the outcome. Like it was just a simple scientific equation. Like I did it, and when he recommended who to use, I didn't challenge that and shop it and all the rest. And then the outcome was, and I mean, 600,000. I mean, I must admit, I was like, that's an insane outcome for your first project. Yeah. I thought so anyway. I was well impressed with her.
Yeah, I mean that could be 10 years' wages for a lot of people.
Absolutely.
And it all comes at once, and it's a part-time job. She probably only put in 5-6 hours a week on average over the whole project.
Yeah.
Because property development's about managing people and managing the process. It's not actually doing, every step along the way with the property development. We've got an expert. We've got maybe a great buyer's agent who can help us find a site, or an agent. We've got architects to help us with design. We've got town planners to help us with approvals. We've got builders who do the building. Yeah. And so forth. Lots of professional people in there doing what they do best, what they're trained to do. Well, as you know, because you're a developer now, it's about coordinating. It's about coordinating the process, and there's very smart people that do the work for us.
Yeah.
I'm proud of the fact that I failed university, and I did last 8 months, so I have to say. But I didn't fail. I left university just in time.
Yeah, just in time before you got that F. Yeah. But this is the thing with property. I notice it's not so much your education background, your formal education background. It comes down to a lot of personality. And that could be just tenacity, perseverance, your ability to build a network around you, self-confidence as well, like trusting in your own. Sometimes it's intuition. It is listening to other people and who not to listen to as well, is a really important key point. I mentioned, I wrote an article, actually it was an email, it wasn't an article, earlier today, just about some advice you gave me at the tail end of last year before I embarked on my own property development. And I said, you saved me 300 hours of stress. And I'm actually not exaggerating when I said that, because I am doing developments from a desktop. And as did Sonia, she wasn't actually based on the ground when she did hers. It is one of those things, you're the puppeteer, and you've got to get those people around you, the right people, the communicators that are on the ground. And it was your introduction to somebody else. This is pre us being aware that we would have border closures again. And look, sometimes you've got to spend that little bit of money to outsource it, to have somebody there. But your advice really did not only save me stress, but the time that I would have had to delay my project, more importantly.
Yeah, that's exactly right. And that's the beauty of property development. There's always an expert for every step. Yeah. And that's what we do. We coordinate. Yeah. That's what we do.
And the other thing I like about property developments, and this has been a bit of an evolution of my own investment strategies, once upon a time when I was in my 20s, the buy and hold strategy was, that's great. And as you get older, and then I've got, school age children, it's like, I don't want to wait 15 more years for this to get equity in it. I want to start to flip the burgers and keep moving along and growing that nest egg. And that's one of the reasons that's pushed myself into this space. And I've got some pretty big ambitions about what I want to do in Sydney and build in the local market here. And Sydney's not the cheapest, neck of the woods to build in. Yeah. So hence
That's your why. Yeah. Like when before you were saying, some of the things that we need as developers, talking about tenacity and this, and we do. There's times when we need to be tenacious, but having a good why. It's where I normally start. When I talk to people about property development, I say, well, look, why do you want to do it? And when we do it to make money, of course, but it's the drive, it's the why. And when I talk to people, well, it's mostly Hillary actually talks to people about their why, because she's a specialist in that area. But it's the drive, it's the thing that drives you. Because hey, seriously, like property development, you're going to have some problems. Not everything is just smooth. I'm going to put sweet icing over it. There are times when you have problems. There's times when you need to be tenacious and you have to work through these things. And it's when you've got a strong why that gets you there.
Yeah.
And different whys, different people. But you have to have a good why.
Yeah, I understand.
You have to have a good why, even in a business. Why, we run our own businesses for a purpose, and a strong why gets us there.
Yeah.
It's not always easy, is it?
Yeah.
Running your own business.
Absolutely.
There's lots of other things pulling us there as well. And but it's that why in the background. It's a better life for ourselves, for our family, for whatever. It's an early retirement for some. It's getting out of a job they hate for others. All sorts of whys.
Yeah, absolutely. And I'm a pretty goal-driven individual, but this is where I've sort of gone, let's do this quicker, faster, and just let's move it along. And that's the momentum that I'm in now. And it's got me. It's like, it's like I want to do this again and again. And but it does scare people. Development scare people off, especially people haven't done one before, of course. That's a natural and I've done this for clients many times. So I've been on the periphery many times, but now that the dollars are on the table and it's my emotional journey, it is always a little bit different when it's yours. And I want to learn from the ropes that way. But when I started out in investing, to me, like you said, I had a vision of what developers were. They weren't female for starters. So I didn't have any mentors or anyone to look up to in that space whatsoever. And it would just seem beyond, probably was to a certain extent beyond my skill set initially, but now I'm here and I'm ready to go to that next level. And a lot of other people who've invested in property over time are like me, but they're nervous about the cost, the funding. And this is where I think, yourself would come into play as a guiding light, I think, when people start out. So what are some of the key things to be mindful of when you start to invest in property? What's like one of the most, in top 3 things that really people need to be mindful of?
We talking about investing or developing? Or?
In developments, like, is it about looking at 20% return on investment? Is it who the builder is, the town planner? Like, what is the most important key?
Yeah, it's all part of it. I think you need to understand why you want to do it. That gets back to the why, because that's going to drive us. And when there's things we have to deal with, that's the strong thing there. And understand ourselves. Like, this is before you get down to anything technical about property development. It's really what we want to do.
Yeah.
And then it's like anything, you need to get educated. I mean, that's how I was a developer for 26 years before I ever got involved in the education side. But it doesn't matter what you do. You need to understand what you're doing and what you're getting into. If you want to work the share market, if you want to work futures, if you want to invest in forests, or it doesn't matter what you want to do on the wealth building side. You've got to educate yourself. And property development's no different. If it's property investment, same thing. You need to educate yourself on property investment. So understanding that, valuing yourself, is first of all, is seek the knowledge. Look, there's always going to be a fear factor, but I think, if you think about, I often liken it to. I talk about safety, and we deal with life-threatening things every day. Like just driving our car.
Yeah.
We're going along at 60 kilometres an hour, and there's another car going in the opposite direction at 60 kilometres an hour, and we're 3 metres apart. We don't think about it because we know how to drive, and we're hoping they know how to drive.
Yeah.
We cross the road, we look both ways, and we can judge car speeds when we walk over the road. So we're dealing with potential nasty things every day, potentially, and so with property development, it's also a matter, and it's, I guess, part of the education side of it you're going to have to learn is, what could go wrong, what can go wrong, and how do we mitigate it? It's all about mitigating risk. How life we mitigate risk.
Yeah.
And so part of what we would want to know early is what we call due diligence. So, okay, we're looking at a potential opportunity. How do we know if it's a good one or not? And there's a process. The great thing about property development, there's a process to everything. And there's a process we go through to check if this is the right one. And part of that is doing numbers. It's the sort of stuff you have to learn. You can't guess it. You won't Google it. But, once again, potential risk, what could be wrong, we can mitigate it. We go through this series of steps, and that's what it is. So it's a confidence game, property development. I mean, you have to be confident, but I think investments are a confidence game too. You simply have to know the field. It's a sport. You have to understand the sport that we're playing here.
It's a sport. I like that.
Yeah, well, it is. It's a sport, but understanding what the risks are and how do we mitigate them, and that gives us confidence. And the confidence is that we know what we're doing. We've either learned it, we're doing it, we got help from somebody else, walked the path before or whatever, and that's that confidence that gets us over. A bit of fear is fine. Yeah. We'd all be dead if there was no such thing as fear. We just wander across the road, no fear of getting hit by a car. There'd be nobody left on the planet. A bit of fear is good, but it needs to be controlled and it needs to be mastered through knowledge and confidence. That's the way I look at it.
Yeah. Yeah, I must admit, with property, when I started out, I didn't have my team around me, and there's been a bit of hit and miss with some of those professions along the way. But I feel like I'm in a really good, solid place at the moment with like accountants, broker, solicitor. Like I've got some really good, reliable networks around me, and people like yourself that are giving in time and knowledge. And I understand where to go, and that's, I think, that's a bit of a journey that most investors have to take on their own. I can't tell you which accountant to go to. You need to be able to resonate with that person. It needs to be the right fit. I mean, I can refer people, but if you don't, my sons call it vibe together, it's not going to work. But it's, so I think the hardest thing also with property management is finding like, who can I really heavily weigh on to get that information as well. So you've got to do the feasibility. Do you leverage off your accountant to help you with those numbers when you're starting out?
Oh no, that'd be the last person I go to.
Really?
I go to there's a place for everybody. I go to the accountant for structure advice.
Yeah.
What structure should I use to purchase this investment, to purchase this development in? And my accountant understands me particularly and the way my finances are structured, so that'll help me with structure.
Yeah.
If I need BASs done, if I need a tax return done, that's the accountant. Feasibility is something that I spend a lot of time teaching people, but it's something you need to take control of yourself. There's people you can get information from. If you need to understand, well, what's it going to cost me to build this? Well, a quantity surveyor or a builder can help. There's always people that can help supply the answers to your questions. Like a feasibility is just a bunch of numbers. It's like a profit and loss statement, really. But I dream about them at night.
Oh, do you?
But I do quite a lot. I think I mentioned just before I came on here, I was just working with one of our students, some numbers on a project in Victoria. But daily I do probably 3. But yeah, it's back to the education, the understanding. But yeah, a place for everybody. There's a place for good property lawyers, or I say property accountants as well. Everybody, marketers. Good agents, good project marketers that can sell new projects. There's a place for everybody, and they're all experts. And the beautiful thing about a property, but they all work for you.
Yeah.
And I sometimes make the joke that I didn't leave uni, 2/3 of the way through year 1. But everybody that works for me and helps me make a lot of money all went to uni. The architect, the town planner, all the the engineers, the accountant, the lawyers, they went to uni, got their degrees, gained lots of experience, and now they come and basically work for me because I hire them and pay them.
Yeah.
And they're all happy, making money, and it's a big team thing.
Yeah.
But I guess what I'm saying is you don't need to have a degree to be a developer. You don't, you just coordinate people, and it just so happens most of the people coordinate needed a degree.
Yeah. Okay. Well, that's good. Surround yourself. What I forget? It was probably Steve Jobs or something that made a statement about, hire people that are smarter than you, or some sort of reference like that.
Oh,
So,
yeah. Well,
like
there's an old saying: you never want to be the smartest person in the room.
yeah, that's
And
it.
that's constantly the situation with me.
Yeah.
At the beginning of a project, I might be in a room. I might be over at the architect's office, you see, and so there's the architect, the town planners come over, and perhaps an engineer, and we're talking about getting the project going. And there's the architect there, did 6 years at uni, and 15 years after that as an architect, and the engineer's done 4 years, and 20 years as and I'm thinking, oh my God, but it doesn't really matter, because I've hired them. I could fire them, but I wouldn't want to do that, because I always hire the right people.
Yeah.
What you want to do, though, is you just want to be the wealthiest person in the room.
Yeah.
And if you're a property developer, once you've done a few, you probably are.
Well, based on that, then, okay, what if you're starting out? Like, where obviously the banks will give you a certain amount of money to start out. You need to be, you have to have some skin in the game that way. But what if you are somebody with a lower income earner? Maybe you've got like a line of credit on your home. You want to get into projects, but you haven't got enough money there to buy a house. What other opportunities are there? And one of the reasons I'm asking this is that I personally did a capital raise for our development. Mm-hmm. And that was a learning curve for myself, the structure, getting that all set up, and having the right team around me that were building that and selling shares within that structure. What's some recommendations to get started if you're, a bit more limited?
Yeah, well, you just mentioned it there. You had investors who invested in a structure to help finance your project. That's very common. I mean, if you think about even the big development companies out there, they're all companies with lots of shareholders. I mean, if you say, well, where does Mirvac get all its money from? It's shareholders at the end of the day, who have Mirvac shares. So quite normal, really. It's mainly the small developers who sort of try and use their own money, but it's like everything else. You can leverage, from there. So in property development, the good part is that you can make money out of property developments without being a property developer. And like property development, it's not for everybody. There's some people who are very happy being a teacher or a dentist or whatever they do, and they don't want to learn how to be a developer. But they would like to, if you like, derive financial benefit from a property development without any intention of, because if you're going to do it, you're going to have to learn, you're going to have to do a course. It's going to take a certain amount of time to do it. There's a lot of multi-skills that go into it. And for those that don't have the time, the inclination, or the desire, but still want to make good returns, then they can invest in a project. You've gone through it. And myself too, I've done many projects with investors. Some of them have been joint ventures. A lot of them have been just a capital raise. And, I've done, when I was working for some big development companies, I headed a lot of joint ventures with, like say the ACT government. We did several joint ventures, big ASX listed companies. But then you can scale that right down, because I've done projects with investors, down to 3 townhouse sort of projects as well. Okay. So, from the investor's point of view, it's a good way of leveraging good returns out of the property development process, I guess you could say, without having to be or any desire to be a property developer. And that's a good thing. And the other thing is you can learn as well, by sort of watching what's going on what you're investing in.
Yeah, absolutely. So, I mean, what would be like a seat? What's a typical sort of seat at the table if it was like a 3 townhouse, something like that? I mean, I guess it depends on who's doing the capital raise, really, what they need. So I know it's a bit of an unusual.
Yeah. There's sort of 2 avenues an investor can go. An investor could, let's say, take a joint, what we often call a joint venture sort of situation in a project, where they go into the project with the developer. They put capital in, as they would, and And that's fine. There'd be some sort of arrangement where they get an interest on funds, or it might be a piece of profit or whatever, joint venture. But they're basically in the project. A lot of investors don't really want to be in the project. They don't want to take project risk, as what we call it. Risk or reward, of course. Mostly reward we want. So they can invest from the outside. So it might be a situation where a company is formed, and then people take a shareholding in that company with their investment. It could be a unit trust, or it could be a company. Let's just say a company is formed, and investors invest capital into that company. In return for that, they get shares.
Yeah.
And that company then lends a certain amount of money to the developer. So the investor is not directly related to the project. No matter what happens in that project, they're not attached to the project. They get a capital return on their investment. It'd be an interest rate return on their capital, in the form of a dividend, but we'll just call it interest.
Yeah.
And that's quite a popular way that investors invest into projects where they're not in the project, they're not part of the project, they're not part of the outcome of the project. They're guaranteed an income with a return. Mind you, there's still due diligence that you have to do with any sort of investment, that sort of thing. But that's a one I use fairly commonly. It's quite successful.
Yeah, because I mean, I know what the banks are paying at the moment, and it's almost like, why bother? Like, why bother? Like, really, it's almost like, my mum did this. She did a term deposit, a couple of years ago, and it was just, honestly, the return, like, I would love to have seen her put that into a development where maybe it was a 12-month, 24-month turnaround time when she could have got, 7-8% out of it, something, just something a little bit more chunky than 0.34 or whatever they're currently offering. Like, it's,
I know.
Yeah.
I did look at the Commonwealth Bank website the other day, and I think for a minimum of $5,000 investment for 12 months, fixed for 12, 0.35%.
Yeah.
And then you've got tax and depreciation to deal with.
Yeah, I know. And this is one of the things I find from Property Women is that we do have a number of people, and I'm going to cough, so I'm just going to mute myself. And no, it's not COVID. Excuse me. What women who have come out of a marriage, they might have sold a house, they might have got themselves something a little bit smaller. They may have a little bit of money sitting around, but not enough to go and buy an investment property, like a set and forget. But then they've got this money, sitting in a bank, just festering away, doing nothing. And this is why I think it's a really interesting proposition for investors. Let's just say you've got a line of credit, whether that's a $50,000 or it's even, I know even with your self-managed super fund, I know that's a little bit more tricky to play around with, but these are other ways that you can actually start to do and wet your feet in that sort of space as well.
Yeah, better than 0.35%. So, we get to talk to any investor who invests in our project. We get to know them, talk to them. Obviously, it's Hillary, myself, but from all walks of life. But sometimes it's superannuation money. They've got a self-managed super fund. Not doing a lot at 0.35%, so they can use those funds. The projects I do are all find you self-managed super funds. So always make sure that, because there's a lot of people with self-managed super funds these days. So that's a great way of getting a good return. People who have a line of credit, they might have a line of credit on their property, and getting, let's say they're paying 2.5% for their line of credit, 2.5% interest. Well, if they were to invest that at 8%, they'd be, let's say 8.5. Keep the maths easy. 8.5. It's costing them 2.5. They're getting 8.5. So they're making a pure 6% net.
Yeah.
By just using debt, a line of credit. It's not even cash that they have, like in super. It's actually debt. It's a line of credit. But paying 2.5% and putting it out at 8.5, getting a margin of 6%. A lot of people do that.
Yeah.
Or just take it off deposit, get it out of there. Yeah. And I think it's about, your money has to work for you. It's not working for you at 0.3%. You have to get your money working for you these days. And
absolutely.
Yeah, you can't just let it's lazy. Money's lazy if you let it be. It'll happily go to sleep shouldn't pick on the poor old Commonwealth Bank, but it'll happily go to sleep in the vaults of the Commonwealth Bank at 0.3%, unless you give it a bit of a kick and make it work harder.
Yeah.
It's like a lazy labourer money, I think. That might be a good analogy. Get it out there working. That's what I think.
Yeah, yeah. And that's, I mean, I think if you were able to find a joint venture structure, and I know do you have students that are looking for people to contribute? Is that something that you pair people up with, there's opportunities?
Yeah, sometimes we do that within our mentoring program. And the reason for that is that if students are in our mentoring program, we're working on projects with them. So if I introduced an investor to one of our mentoring students, I'm happy to do that because I'm actually working on that project. I wouldn't like to just, introduce strangers to strangers because I don't know what's going on there. I've got a bit of responsibility. If an investor approached me, I've got obviously responsibility to look after them. But yeah, within our own program, we do sometimes when students have a deal and they need an investor, then we can supply an investor, and plus we do our own projects as well. So
yeah,
always something happening here on the development and investment front.
What do you personally? Are you always investing yourself now? Like, do you become a bit more passive and sit back? Yeah. What are you up to?
Well, I invest in my own projects, obviously. Yeah. I like projects that produce good income.
Yeah. Fair enough.
Well, don't we all? I mean, as developers, we make a cash profit. We do a 3-lot subdivision, we make a cash profit. We do 10 townhouses, we make a cash profit. We do a 2-lot subdivision. It's all about, our profits generally come through to us in cash. But we can, if we want to, keep some of our product as an investment. So we might do a duplex. We sell one, we get a cash profit, we keep one as a long-term investment, remembering that we got it at cost price, not retail price. So all that flexibility. But personally, yeah, and Hillary's the same. We're partial to cash, in terms of turning money over in the property development arena. She's doing an NDIS project at the moment in Western Australia. So that, that's a good outcome at the end. It's when you develop those projects, you tend to keep them because they're a good cash flow and a good ethical product, a good ethical investment as well. And I'm doing a retirement village at the moment, which we're just looking at raising a second tranche of funds on that. Retirement village, I mean, that's another good ethical type of project. Yeah. Retirement village, and that one's in New South Wales. And so that's what I do. At the end, they produce a set income as well. So yeah, I like projects that I can keep all of or some of that produce a good return.
Yeah, absolutely. The interesting thing with retirement villages and that age bracket is just the baby boomer numbers.
Oh, yeah.
Like I can see that's where that growth is and why there's so much interest now in those co-living structures and things like that as people are downsizing and those sorts of opportunities. So you're based in Queensland and what Hillary's got WA on the go, you've got New South Wales on the go. Do they find you or you find them? How do you find them?
Yeah, a bit of each. Hillary's doing a project joint venture with a builder. Whom we do know in Western Australia. It's an NDIS one. She's also involved in a project in Victoria as well.
All right.
and she's involved in with helping me a lot, but also financially involved in the retirement village.
Yeah.
And she just finished one in Brisbane. So she had four projects in 4 states at one point. Yeah, she got 3 states. So I mean. Retirement's a great product because, as you say, the baby boomers coming through. It's in constant undersupply. Yes. It's a market that it's not like the normal real estate market, which can have its highs and lows, based on things like population growth and income, rather interest rates, all sorts of things affect the normal real estate market, as you know. Whereas, in terms of retirement, it's just more and more old people. I'm one of them. And people just keep
dwindling supply.
No, it's not. There's not a dwindling supply of old people.
Yes.
There's more and more of them, and not everybody wants to live in a retirement mortgage, but more and more, as you know, more and more over 55s, over 60s, then there's going to be a percentage of those that do. And some of the retirement villages these days are absolutely fantastic. The sort of facilities that they have, they're like resorts.
Yeah. No. But that's the thing, isn't it? I mean, people are living longer and quite healthy, and they're not, they may not want stairs, but it doesn't mean they want to sit and watch daytime TV either. They still want to get out and be physically active and things like that. So whereabouts is that?
So what we've done there is we've bought part of a Greg Norman design golf course. So it's in Tamworth.
Oh, right. Okay.
So it's in Tamworth. Now, Tamworth's population is about 75,000. So it's, and we know what rural's gone off now for about a year and a half. Tamworth's always been a very solid sort of a city anyway, not just because of the music festival, but it's got a population base of about 75,000 just in Tamworth. So there's a golf course in there that Greg Norman designed called the Long Yard Golf Course.
All right.
And we bought a parcel of land, which we settled on in February, alongside the golf course. It actually was part of the golf course, but not part of the fairway, but just over to one side. It was actually the driving range for the golf course. And so we bought that. And we've got an approval for 99 houses.
Wow.
We'll call it a retirement village, but it's more like a country club, really, for over 50s. So it's an over 50s lifestyle resort.
Yeah.
Sort of quasi-retirement village, but more like a country club.
Yeah.
And right on the golf course.
It already sounded a little bit elite to me.
It's but so it's a great project.
Yeah, that sounds awesome.
Retirement's a specialty of mine. I've been involved in that for 25 years.
Yeah.
In the retirement sector. So this is the very sort of early entry retiree market.
Yeah.
People sometimes get aged care and retirement mixed up.
Yeah.
Aged care is very much, over. I think the average person in aged care is like 81 or 83 years old, and obviously not in good health. And then you've got a typical retirement village is often over 55s. Mm-hmm. I think the average age in there is 71. But then you've got the bottom level, if you like, the retirement village quasi-country club on a golf course sort of thing, which is over 50s. Yeah. Although the average age, I think, on those products is about 61. So that's sort of my space. That's where I like to be.
And you're personally doing a capital for that now?
So I'm raising capital for that one. I've got quite a lot of money, a 7-figure amount of my own money invested in there. Always do that with projects. Look, here's a tip just for everybody. When you're investing in a development project, there's a couple of things that I look for. First thing I look at is the experience of the developer, because I think that's important. If they've done lots of developments, then it's going to be safer. It has to be. The next thing I look at is the security that's being offered. And a lot of people forget to ask about that. Like when you go to I'll give the Commonwealth Bank a good rap this time. When you go to the Commonwealth Bank for a home loan for your home, and you're very happy because they approved your home loan, what do? Well, you've got a loan document, obviously, but then they take a registered first mortgage over your house. And they're not stupid. The big four Australian banks are four of the best, most solid banks in the world. And they want a first mortgage. But they don't want a second or a third or caveat loans or anything else. They want a registered first mortgage over your house. And so in the projects that I'm doing, and this particular retirement village, that's the security that I offer, is a registered first mortgage. No seconds, nothing else, because there's no other financier. The finance that drives the village is the investors' funds plus my own funds. So that is a very high level form of security. Makes it very safe. So, you've got the experience. Sounds like an ad almost, sorry, but, you've got the level of experience, you've got the high level of security. I always like to have a look, if anyone's broke, do they have any of their own money invested? Because to me, that's a bit of an indication that they're prepared to back it.
Yeah, that's
and, it's a good thing. And the expression we use, do they have skin in the game? You know that expression. I do. I've got a 7-figure amount of skin in there. And then the obviously interest rates and those sorts of things. First mortgage, because it's such a strong form of security, normally the returns sort of starts about 6%, sort of tops out about 9%. That's sort of the space for registered first. 9's pretty well up there. This particular project I've got is at 9%. That's what we're offering, 9%. So it's on the top level of interest rates. It's stronger security you'll get first mortgage. And it's my, I don't know what number project this is, 99th or 101st. I've got no idea. But so yeah, so that's one that I've got at the moment. And we're going to launch that tranche in about a month. So yeah, I've actually got a webinar coming up about that project in 2 weeks. 2 weeks tonight, in fact. Just about that particular investment. If anybody is interested in investing into a property development project, and we do it at what we call earn and learn, because we don't. So people can obviously earn a good interest rate from it, but I also run it sort of like a bit like an update on the projects, is like education. So I actually educate people on the whole process right from the beginning when we first found the site, and all the way through. So it's like an earn and learn. People love that. They love learning about it as well, how it all came about.
Well, yeah, I mean, some people are going to be drawn to a passive investment, and others are going to want to see what's going on and understand it and take learnings from it, because education is part of the fun, I think, and that's
and it's a good way of reporting as well.
Yeah,
because we're pretty strong on the reporting side of things. So that's good fun. Love doing it.
For that project, what's the turnaround time, do you think that one will be?
It's a 2-year term.
Yeah.
So 24 months. Great for self-managed super fund, or when I look at the investors that have already invested in the project, some are using lines of credit. Like I said, they're probably paying 2.5% of their money. They're getting 9 back, so they're getting a 6.5% margin. Quite a bit of self-managed super fund. People like to get a better return than sitting in the bank. So self-managed super fund, or just people that have got cash. So but yeah, I mean, there's so many great things about property development. That one is how to make money out of property development without being a property developer.
Yeah, right. Yeah, absolutely.
So we've got everything covered there, but it's all around. I could talk I can talk underwater about property development, but one of the things I love about it supplies one of the 2 basic needs in life, food and shelter.
Yeah.
And if not for property developers, we'd be living in caves or under trees or something, And so we produce shelter for people. That's the way I look at it. And we try and do it as harmoniously as possible to meet people's expectations. But that's what we do as developers,
Yeah.
You're one, that.
Yeah, absolutely. You're preaching to the converted. Yeah, absolutely.
We're not in the food business. That'd be the other thing. If we weren't property developers, we'd be in the food business. But supplying food, but we supply shelter. So
yeah, absolutely.
And the property market's so dynamic, isn't it? I mean, it's exciting. It's never the same. That's why I'm still here after 38 years. It's not that I'm stupid. And, I sort of started something and I can't get out. I just love it. It's dynamic. It's changing. It's exciting.
Yeah.
There's a lot of stuff happening. It's great to talk about.
Yeah, absolutely. I agree. All of the above. And as a property buyer, I always say this to my clients, is like, there's never one transaction that doesn't teach me something, or there's a learning I take from it, because that's the thing. It's not a cookie cutter scenario. And that's sometimes the fun of it all, or the frustration of it at the same time. But, I love it for that reason. My job is never mundane. That's certainly a fact.
No, we're not a type of people that could do a mundane job. But hey, look, if you're out there and you've got a mundane job, that's okay. You can still become a property developer. I mean, a lot of people who really want to do it to get out of the day job.
Yeah. Oh, look, absolutely. And that is something I guess you can do passively if you're sort of starting your property investment strategy, concurrently with your job, and it doesn't need to take up all your time as well. Like if you were to come in and do a big renovation, that might be you on the tool if you choose to be. It's very time consuming, and I think that's something that can be more of a desktop approach to investing as well. So
like I say, to be a property developer, what tools and so forth you need. You need a telephone, a laptop, and a desk. That's all you need.
Yeah.
But then obviously you've got to learn what you're going to do. You've got to learn the other side of it.
Yeah.
Or if you want to just make money out of property development, then you can invest in property developments. That's the whole point. It's great.
Yeah, absolutely. Oh, look, thank you so much, Bob. I've really enjoyed having a chat to you tonight about it just even just hearing about the fact that I can do all the things that I'm doing like hands-on myself, but I can actually also splinter those opportunities off and money off to other things. So it might be something that I might even entertain with my SMSF, because I do have property with that as a structure. But don't ever come to me for advice on shares. That's all I can say.
Well, definitely don't come to me. You know, if I'd started in shares years ago and I was a stockbroker now, I'd probably have most of my money in shares, you know. But I'm not a stockbroker, and we have most of our money in property.
Yeah,
but there is something to love about the tangibility of property. That's, you know, you can dig your fingers into the dirt. It's real.
Yeah,
you know, it's not a digital certificate.
Yeah, absolutely. So if anyone's got any questions, now is your time. I think if you wouldn't mind, perhaps when time does permit, to share that information that you've got when people can reach out to you as well, Bob, that'd be really good that we could do that.
Yeah. On the education front, Joe, I might just mention that. We do have a special on at the moment for 2 of our courses, our online course and also our bundle, which is 3 different courses in one, where we're offering specifically anybody on Property Women a 10% discount straight off the top. You can find out about those on the website, propertymastermind.com.au. That's a little bonus we're running for about a week.
Oh, great. Thank you.
End of next week, just 10% off anybody who's on.
Yeah.
Admin at propertymastermind.com.au. That's our email. You can contact us on that.
And they get an opportunity to speak to yourself or Hillary, just to understand.
Yeah. We're pretty approachable people, really, Hillary and I. We both run the business. We've got a full-time staff and a part-time staff member, but we don't hide. You know, we don't sort of hide behind a team of marketing people or whatever. We're real people. You know, we're real people out there doing it, as you know.
Yeah. Absolutely. And Kim has asked if we could also, I don't know if you've got a link, if Hillary is able to share a link now, or perhaps that's something I can send out afterwards for a webinar about the investment program.
Okay. Yep, we'll do that.
Available.
We'll send the link out there, and I'll let you know, Joe, because you may have obviously people in the community that you know, don't have the funds or the desire to get into a full-blown property development, but you know, might want to do a bit better than the NAB.
Yeah.
I've been picking on poor old Commonwealth Bank all night. I'll have a great I'm sure their interest rates are a bit of the same.
You know, it's what's funny I found in the last 18 months is that people have had more funds available to them. So I have had a lot of people ask me, you know, can I get in on joint venture? What can I do? And I'm happy to introduce people, but that's not how I that's not a business I operate. But you know, go and speak to Bob and see what he can do. Go and speak to so and so and see what an opportunity is. And then people can, and because you know the markets have gone gangbusters in all capital cities, regional. So people are sitting on principal places of residence that have gone up. There's equity sitting there. So you might be watching this now going, well, I can't even get started, but get your property valued and see what line of credit could be available to you, because then you can convert, as Bob was saying, put that money and then sink that into an opportunity like a development. And it is you know, most of them are sort of 12 to 24 months, as I understand. But that's an opportunity there for you to grow your nest egg quicker and faster and learn on the way.
Absolutely, yeah. It's like we said before, we've got to get that money working for you.
Yeah, absolutely. Look, thank you for your time. I really appreciate it. I love how giving you are of your experience and information as well. It's always an absolute pleasure. And thank you to everybody who tuned in and chosen us over a raft of reality TV and other fun things you could be doing on this evening. So thank you. And Hillary did say she would send out to myself the link, and I will share that with everybody and share a recording of this as well if you wanted to share that with partners or anyone that was unable to tune in tonight. Thank you for the feedback on copying seen here in the chat box as well. So I do appreciate it. Good evening to all, and thank you, Bob.
Thank you. Bye, everybody.
See you later.